US dollar index has approached the 7-week high, and this is how investors expressed their preferences in anticipation of the US Fed meeting. Indeed, the interest rate will apparently remain at the same level. In addition, monetary policy easing timings will not be announced, as the latest report on inflation in the United States showed the resumption of a price growth. Most likely, the Fed will take this information into account, and that's what is supporting the US dollar. In our video review, we will discuss other news and publications that may influence the market sentiment. You're watching the Trader's Calendar. As it's usually the case of the beginning of each month, markets are getting ready to assess data from market economics on the industrial sector. In particular, we are interested in China's industry. In the last reporting months, the manufacturing PMI rose to the highest level since August. In January, the indicator is likely to continue its uptrend. This is a positive sign amid instability and news about the recession's reservation from the Chinese National Bureau experts. The Chinese government informed about the trend in large enterprises, while MARKIT is a private organization whose experts rely on business surveys. Who has more accurate information is not an easy question, but the currency market sentiment is often speculative and short-term, thus traders are likely to react to positive data. Against this backdrop, risk sentiment will likely improve, and the Australian dollar may receive a boost against the US dollar. In the European trading session, markets will pay close attention to the inflation rate in the Eurozone countries. Analysts assume that consumer prices will decelerate to 2.7% in January. However, it's unlikely that such a trend will bring back the question of the central bank's rate reduction on the table. With the unstable inflation, changes in monetary policy are inappropriate, so it's necessary to wait for some time. The Bank of England is in no hurry to revise its interest rate too. On Thursday, the regulator will hold a meeting and the rate will remain at the same level. All eyes will be on the distribution of votes in determining the rate. In December, 3 out of 9 members of the Monetary Policy Committee voted for a 25 basis point increase. And now all major central banks are already planning the timing of rate cuts. And in this connection, analysts believe that at least 2 policymakers will vote for a rate hike. In the last 2 trading days of the week, the news flow from the United States will also have an impact on the markets. On Thursday, we await the report on the industrial sector from the Institute of Supply Managers. Unfortunately, the index is still pointing to recession, and the US industry was declining for 14 months in a row. In January, it's likely to sag for the 15th month. Nevertheless, the most important news from the United States in these 2 days will be the non-farm employment change. According to analysts, non-farm payrolls may have increased by a modest 177,000 in January. And we have often mentioned that an average monthly gain of 220,000 jobs is a sign of a healthy US economy. However, in recent months, analysts have been making very modest forecasts for the US labor market, and the Department of Labor has indicated values above the forecasts, causing a surge of optimism for US assets. Notably, the stock market usually sets the bar low or in anticipation of corporate reports. Therefore, we see the S&P 500 index hitting its all-time high. Well, you can call in a bubble, but some managed to take advantage of it. When the actual number of jobs suddenly comes in above expectations, you can take advantage of the US dollar's rally. And we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.